Hey, this is the Third Coin Podcast, insight into the past, present, and future of blockchain, crypto, NFTs, and Web3 technology. This program is hosted by Grant Cermak, Dan Mueller, and myself, Louis May. You might say this is a series of discussions, interviews, questions, answers, opinions, and maybe some conversation about what is the third coin. All right, good day, gentlemen. Thanks for joining. Today, the topic of conversation, amongst other things, Chia, is going to be, there was some news about a massive Bitcoin heist that took place, and then we will cover a little bit more of the topic of privacy coins, because it all kind of intertwines. So I just read some headlines, guys, about a couple that was arrested because they were involved in the laundering of stolen coins. Can you guys elaborate?
Right. So some amount of Bitcoin was stolen at some point, and there have been a couple of people, a rapper, a very excellent rapper,
very bad rapper,
was selected. They were selected as the fall guys for the people who likely pulled off this heist.
By bad rapper, you mean the woman, right?
Yes.
Yeah.
Well, Grant likes her style. Apparently, I think. Yeah, that's pretty bad.
Well, I downloaded her album. I've got it on repeat.
Oh, maybe she's got better tracks than the one they've been taunting or flaunting on the internet. So Ilya Lichtenstein and Heather Morgan, the rapper. This is a Bitcoin heist from Bitfinex back in 2016. I think it was somewhere around 120,000 Bitcoins, which were valued at around $4.5 billion. Does that make it the biggest heist ever? Well, maybe not at the time, but I think maybe
at the time it was worth less just because Bitcoin was worth less. But now that turns out to be around $4 billion is what you're saying, right?
I wonder how much the Mt. Gox theft was. That was pretty big too.
So anyways, Grant, you made obviously a spectacular claim there that they are taking the fall for this. Could you, what does that mean?
It's an interesting theory. Let's elaborate.
Yeah, I mean, I'm not much for conspiracy theories, but it just something doesn't smell right with this whole thing. It's these two individuals they don't seem to be extremely technically competent. They have no pedigree, being able to pull off this kind of stuff. They have no background that seems to indicate that they could do something like this.
By the use of her mastery or lack thereof of the English language, thereby we are concluding that there's no way she's also capable of writing the code that's necessary to do this sort of thing.
It's just highly dubious, that this is the case. But I think what's interesting we should talk about beyond kind of making fun of the situation is just what do blockchains really do, and how could you possibly find someone who was, responsible for such a heist? And if you wanted to cover your tracks, what should you have done instead? Those are kind of all interesting things that I think.
Yeah, totally. So let's start from a simplest version picture of Grant of whether they did it themselves or somebody else did it and how they might fit in. What happened? How does someone steal Bitcoin?
Ultimately, to steal Bitcoin or to steal anything, there has to be some coin somewhere, and then you have to get access to a private key that allows you to move those coins. If you move those coins to some address, and that address is now not part of the same mnemonic seed derivation set, then you've taken those coins, and the person who originally had control over them has lost them. So fundamentally, when we're talking about blockchains or anything, the ability to move a coin is ownership, right? If you can spend the coin, if you can move it, if you can transfer it to somebody else, then it's yours. And that is done by using the cryptographic underlying stuff that blockchains rely on, right? So you have these coins and they exist in the blockchain. And what your wallet does is it looks at all the coins and it says, hey, what coins are probably mine? And it does this by kind of a neat technique. So what happens is you generate cryptographic information by starting with these words. So a lot of people have used crypto, at least who've done self-custody of crypto, is familiar with the thing called a mnemonic seed or not mnemonic phrase. So you get all these words, okay? And what these words do is they're part of the standard for whichever chain. So each chain can have its own words. They can have their own standards. They're all kind of different. So Bitcoin has this particular set of words, and these words generate or are able to deterministically generate public and private key pairs. And these public private key pairs are what you use to send Bitcoin to a particular place. So again, this is all just kind of bookkeeping on the blockchain, and the coins that are yours are ones that are associated with private keys for which you could potentially move those coins. So that's what it means to have a balance or an amount or whatever. You have some amount of coins, or you have some amount of ledger amount within Ethereum or other account models where you could move those coins. And that's sort of what ownership means fundamentally.
So with
Let me dumb this down for the people who are in Sector 7G or from Springfield. When you generate an address, like somebody says, oh, you need a Trezor, you need a hardware wallet, whatever, you're Bitcoin rich, you bought some long ago and it's worth something now, people are telling you to get it off the exchange, what do I do, right? So you buy a Trezor or you buy a ledger, and what does it say to do? It says, is this new or are you restoring seed words? Well, it's new, so it tells you to write down 24 words. Some wallets use 12 words, some use 24, and Grant's right, they can be different dictionary words for different blockchains, but mostly they're not. Mostly it's the same words. And Trezor and Ledger use the same words for every coin I've ever bought, except Monero. And that's the privacy coin we're probably going to talk about in a little while. But when you think about hacking, people think about, tank, load the jump program. And, that's kind of the cliche. The other one is, Tom Cruise, like, don't let the drop of sweat fall on the floor as he's hanging from the piano wires and, the closed room. But that's where my Bitcoin are stored. They're offline. They're in a cold wallet. All somebody has to do is see those words, take a picture of those words if they're laying on your desk. They don't have to steal anything. They can go home, shake your hand, drink your wine. 2 weeks later, they can go to their computer, hop on a VPN, go to Switzerland, and restore that wallet from a different IP address and move those coins from your wallet to theirs. That's all it takes.
And that was going to be my next question, i.e. statement, is this heist, just like every other heist we've ever known of, wasn't anything where somebody wrote some fancy code and injected it into the system and unless that code was to retrieve the mnemonic sequence. So simply,
actually, I don't know the details of the Bitfinex hack. It could have been some sort of technical glitch, like some of these transfers between different blockchains. People are exploiting actual deficiencies or defects in the code. Okay. And even this week, a white hat hacker, one of my the first guy I ever followed on Twitter, Sarek J Freeman, identified a flaw at Coinbase that could have cleaned them out. And he told them about it and they patched it, and I think they paid him a bounty. So
those are, I guess then I've identified, and we don't know. We don't know which is which, but there's two ways to get coin. There's hack a vulnerability in the system, or just hack something and get their codes.
Social engineering.
The mechanics of how you get to it are different, and probably not that important for what we're going to talk about. But ultimately, you need that private key, because to move a coin, you need to be able to submit something to the blockchain that will be accepted. And the only way to do that is to have a private key. There's two ways to get to the private key. You either have the private key directly, and that's possible. Like, before we used mnemonic seeds, everything was just public private key pairs. And so the mnemonic seed and the deterministic wallets, which is what the seeds start from, it has been a relatively recent thing, but it's a good progression. But like, there were, period of time where that even wasn't used. It wasn't state of the art. So certain types of paper wallets, and people were printing off Bitcoins and what have you. I mean, these were just like one time. They were not from a mnemonic at all. So anyway, you have to have the private key. Now, if you take a picture of somebody's seed words, or if you hack into their system and you get their private key, that's entirely possible too, because centralized exchanges or other types of things that need to be able to interactively move coins around, they have to have that private key online, in memory, next to the coins they want to be able to move, because otherwise they couldn't do what they need to do, which is to give you the Bitcoin that you just paid for in fiat. If I give you, $10,000 for some amount of Bitcoin, I want to receive my Bitcoin right now. I don't want to wait some days while you go look things up and do whatever. I want them immediately. So that's what centralized exchange and other exchanges are doing. They have what's called a hot wallet, or they have a medium tier wallet. So this determines how slow or how much friction there is, but ultimately it's the same operation. So when somebody hacks Bitcoin or whatever, or steals some, they're doing the same operation that legitimate people do whenever they're just transacting in Bitcoin. And the interesting thing is, when people were buying drugs with Bitcoin back in the day, this was very funny to me because I looked at it and I was like, wow, this is not a good idea. You should not buy drugs with Bitcoin.
You're leaving a really awesome digital trail.
Yes, because the thing about Bitcoin and every blockchain is it's intended to be a mechanism of record keeping. It is not any kind of privacy thing.
No,
every
obfuscation, yes, but all you have to do is follow that trail.
But it's
to where
barely an inconvenience.
So you're just chuckling at the irony of people thinking they're becoming more covered up or more unidentified.
But I didn't give a shit. I was buying some fucking weed in 2012, and I bought it with Bitcoin, and it was some good weed, and I smoked it. What you gonna do? It's 10 years ago. Statute of limitations.
Sure. But the irony is that
if I were gonna hire a hitman or something like that, like the Dread Pirate Roberts, probably would have used Monero. But I'm not a criminal.
Well, but let's stick on this for just a second. So there is some amount of anonymity with Bitcoin, right? Because you can generate some seed words, and then you can generate a public-private key pair, and no one would know whose that is. And that happens all the time. It happens every day. So I could...
Because is there an IP address linked to that generation? No.
I was just going to describe that. So there are ways to generate these mnemonics. There are dice rolling techniques. So you can sit in a room with some instructions, some dice, some ways to generate randomness. And you can do this completely offline, and you can generate a public-private key pair. And you can go type that in manually with fingers, and then you can ask somebody to transfer some coins to that address, and there is no record of where that address came from. It's not tied to anything. But the minute that address touches something that's been what we call KYC, know your customer, then everything sort of is linked at that point. So you have the true virgin coins in the world of Bitcoin and all blockchains. And these are the ones that were generated by farmers. So these ones are the true anonymity coins. Like they're not tied to anything. They're not from anywhere. Those coins that were farmed, there's really no way to know how they got there. They've been generated by mining or farming or whatever. And they're there, and they're not tied to anything other than the fact that there's some address that's been used that they were paid to. Now, if you've doxed that address in some fashion because you farmed or mined some coins, and then you took some of those coins and you sent them to a centralized exchange, and that centralized exchange was KYC, somebody can do all of these sleuthings, and it's not that hard. In fact, this is so easy to do.
Super easy.
It's barely an inconvenience.
So so
law enforcement is doing this all the time. In fact,
the big thing is that in order for the Bitcoin to ever have any actual real world use, i.e. purchasing something, it has to be hooked generally. The easiest way to do that is hook it up to something that's
not at all. I could receive some coin to some unknown address, and you could sell me something. You could sell me whatever, and we could use the mechanism of payment to be Bitcoin. It would maybe be known that you have done something that sent some to some address, but as long as I never sort of talk about that Bitcoin that I now have.
But my purpose, Grant, is that most people aren't putting that kind of thought into their purchases, and so there is a digital on-chain trail that's findable. It's pretty. What you're saying is it's pretty easy to make sure that doesn't happen, but most people haven't. So there is a thing out there.
It's fairly difficult to make that happen, and it's fairly difficult to continue to keep it that way.
Because if you have a dragon hoard of anonymous farmer coins and you accept a transaction from somebody in Bitcoin and you add that to the same wallet, your entire stash is now tainted with that transaction to that other. I mean, it's
so
very easy
behaviorally,
to screw it
as
up.
humans, it's almost impossible to make that happen because we want to think of things as piles of stuff we have instead of keeping everything so separate that we're always wondering how everything's separate.
As usual, the human is the weak link, right?
It's hard.
Yeah.
It's hard to do. So let's talk about a way that it can be done. Okay.
Well, so one more thing before, because now we're going to move into that I know what we're going to. Is this then what happened and how these two people got caught?
That's absolutely how they got caught, because
they even went into Monero and came back. I mean, but yes, sorry, Greg.
It just comes down to this. When some coins got stolen, somebody moved some coins, and the party who was got their coins stolen from says, hey, all of these coins have been removed from my ownership. They've been moved without my permission. They flagged every single one of those coins, and they said, look, this transaction from here to here, that was illegal, and we're going to keep track of all of this, everything that got moved over here. So at that point, all you got to do is watch those coins. And at some point, somebody's going to make a mistake. The mistake they're going to make is that they're going to transfer it to somewhere that's KYC'd. And then they're going to go knock on the door and be like, how did you get this coin? Because this was a stolen coin. So you either tell us what's going on or you're going to jail. So that's kind of how it goes. You just,
so now with these
twist the arm of the person.
If they don't, they either gotta roll over on somebody or not. And if they don't roll over on somebody, then we can basically kind of either they stole somebody's mnemonic code or figured out how to do that, or they got paid as the fall guys and they're going to do their time and get a portion of that stuff.
Something.
We don't know exactly how this is.
How many did they recover? They recovered about 96,000 Bitcoins out of 120,000. Isn't that about right?
You might have the details more at your fingertips than I do.
I think that I'll check and make sure, but I think it's something like that. My theory, when you started talking about them being the fall guys, I'm like, okay, what do you do with $4.5 billion of Bitcoin? That's going to be, with inflation and everything else, it's going to be 10 billion in Bitcoin, 20 billion in Bitcoin before too long. I mean, you can't hide that amount. The entire market cap of Monero is less than 3.5 billion. I mean, if you bought all the Moneros, you'd still be like, what do we do with the rest of this Bitcoin? There's no way to hide it. And there's no way to get it. There's just no way. It's just way too much.
Let's talk about,
if you can get them about
hiding it. This is interesting because we got to talk about what you really got to do if you want to do something, right? If you really want to do something online and you want to be protected, you have to use something called a privacy coin. So privacy coin, there are a few. I think the last time Dan and I were talking
almost
about
100.
this, you were surprised at how many there were, but there's one that's really popular. It's the kind of OG, the original privacy coin is Monero. And law enforcement has had their eye on Monero and has been trying to get their hooks into Monero since it started. And it was done very well.
Too. They hate them.
Yep, it's been done very well, and Monero is not widely supported amongst a lot of the main exchanges, likely because of arm twisting and backroom deals saying we don't want you allowing this to happen. So Monero is this coin that has a special property that you can't tell this coin went to this coin. It's not possible. You don't know what coin came from where, how anything gets generated. It sort of just works. And
so the chain is designed to keep track of the coins, just not keep track of where they came from.
It's very interesting how these coins work. And it is, I mean, we kind of fault me sometimes for being overly technical in this and being able to dumb it down. It's almost impossible to dumb this down. Like it's magic movement of coins. It's very, very difficult to understand what's going on in Monero. But essentially, yes, like the coins just magically appear and disappear, and there's no way to tell how they're moving around. And they don't, oftentimes these privacy coins don't even use standard mechanisms of discussion between the participants of the blockchain. For instance, Verge currency uses an underlying protocol called Tor. And Tor is a way to obfuscate what machines are talking to each other and where those machines are. Essentially,
is that the same Tor that's used for VPNs and stuff like that?
Tor is the onion router. It's It's a method for obfuscating your origin IP address. It's
Okay.
used primarily to get on the dark web and also for this sort of thing. Anything where you want to hide where you're coming from, Tor is a good way to do that, assuming everything's up to date and you don't mind it being a little slow and putting extra hops in.
Interesting. Okay. Please continue.
So to pay for that security, to pay for that anonymity within Tor, you pay for it in performance. So where direct interchange of data between a client and a server between two computers can be very fast because they're talking to each other. When you use something like Tor, you're intentionally saying, I want to route the traffic extensively throughout the network, so it's really hard to tell where it originally came from.
Got it.
And that's the point here. You have to make sure that you're using an underlying protocol, and this means like how machines talk to each other, that's anonymous. And then you have to use a blockchain that has that anonymity or that privacy built into it. And if you couple those two things together, then you can sort of hide money in a very substantive way. So this is where we need to start talking about inflows and outflows, right? Okay, so if you have some Monero and you accepted one of these tainted coins, these stolen coins, what might happen in this exchange? Well, there are exchanges where you can buy Monero, and there are always trading pairs for each different types of crypto. So it means I can buy crypto with either some other type of crypto or some fiat or whatever. So centralized exchanges allow you to use fiat. I can use USD or euros or whatever other types of fiat currencies there are. And I can, through a centralized exchange, they'll take your actual money and give you some crypto for it. And there's a record of that, right? Other places, you can swap a crypto for a crypto. So a lot of exchanges will support the fraud that is Tether, USDT, and they'll allow you to swap USDT as kind of the base trading pair. And there have been new sort of base pair things that have come out like USDC. So these are different types of pairs that you can use to get between currencies. And so with Monero, there's a lot of places that support the BTC to Monero trading pair. So that means you can take your BTC and directly swap it for Monero. And if you do that with one of these tainted coins, then once you're into Monero, your funds are pretty much free and clear.
So it's almost like now knowing that, as you're telling this, I understand the whole thing. I'm also thinking in my head about how these two got caught is almost that you almost got to be purposeful about getting caught if you know about any of this stuff, because then it's almost like they transfer the whole $4 billion of coin so that they could fall guy these two people for all of that money. And then maybe those people transferred it away right away. And now the next person is cleaned, because the right way would have been, instead of transferring all of this, let's transfer $100 million right into Monero from a ghost wallet. And then boom, they have the money.
Well, so this is one of the things, like once you need to get your money into a privacy coin if you're going to deal with stolen funds. Like, so this is kind of and the reason we're talking about this is not to give anybody who's trying to do this the roadmap for how to do it. We're talking about this so that you understand how blockchains work. So this is informative. It's not giving you a road.
And this keeps you
this is not financial or criminal advice.
This is not criminal advice. I'm not.
Well, this also is valuable
to help you with this. I will not help you.
You need, for that, you need a criminal defense attorney.
You got to understand that this, knowing how this stuff works and how a criminal would do it, protects you, the users of a criminal using these techniques to rip you off too. That's the whole thing here.
I think the last thing we need to talk about is stuff that exists inside of Bitcoin. That's another thwart to like this whole tracking
hold on.
coins.
BISC.
Okay.
We need to fork into BISC for just a second. BISQ. BISC is a decentralized exchange. It's a way for you to anonymously trade Bitcoin for Monero and Monero for Bitcoin from one party to another through a decentralized mechanism. It's open source to use. Does BISC? I don't know if BISC uses.
And that's an off-chain trading platform, just like everything else. Then.
It's an open source off-chain trading platform. It's managed by a DAO, and it's worth checking out. BISQ. If you value
get in
anonymity,
trouble by being? Couldn't they just have legal ramifications if they help clean somebody's money?
They are not, it's kind of like,
I would think
they're
they
not
could.
responsible for what happens on that platform. I mean, anybody can use their platform. You can't tell if you can't as a exchange say these Bitcoins are not, I mean, you could, but no one's going to do that. And this isn't a
Okay.
company. This isn't a company. There's nobody you can sue.
Certain types of companies do have a responsibility for doing that. They have to ensure that they're complying with FINRA requirements. So you're not supposed to deal with countries that are on restricted lists. There are restricted coin lists. So this stuff is definitely any point where there's any points of centralization, you have to worry about this, and they do have to deal with this. Even a wallet that's non-custodial like Exodus has to deal with this kind of stuff because they have some amount of centralization. They have a backend that you're actually talking to. The only way to really do this, right, is to run your own nodes. You have to run your own Bitcoin, like full node on your own box. So if you were going to deal with this stolen coin, you would have to do that. And the next thing, which we didn't get a chance to talk about, is coin joiners or coin muxers. So there are some techniques where you can say a whole bunch of coins are going to come together and they're going to get all twined up in a way that makes it impossible to know who was working with illegitimate coins and where the legitimate and illegitimacy ended and happened. So there's definitely like a path to dealing with all of these issues that have been contemplated and that are in current practice. But I think Dan's kind of hitting on the point here is that there are these ways to sort of get from point A to point B. You go from BTC to Monero. Once you're in Monero, you're pretty much good to go. Now, could they have done it with all the coins? Probably not all at once, but they could have done it over time, and they could have done it with their own full node, and they could have done it in a very protected way if they'd have been really smart about it. So, the question is, like, are they smart enough to pull off the hack, but not smart enough to know this kind of stuff? Or can't they hire somebody to do this? It doesn't make any sense.
That's the part that I get right away too. There's some fishy business going on, because if you're smart enough to make this stuff happen, you're also smart enough to take some of the precautions that would keep you from getting caught.
They're never going to stop chasing these coins unless they think they've found them, unless they think they found the thieves.
Yeah.
Oh, we recovered most of it. We recovered, 82% of this, 90% of it. The rest of it, went to
the rest of it, if they were
wallets.
smart, they would start doing some of this stuff. And it's surprising to me, and it's almost unbelievable that if you have that amount of coin at your fingertips, that you couldn't borrow against.
Well, maybe that is where that other 10% is they take the fall guys for these 90%, and now they get to keep 10%, which is $500 million. And they clean that while everybody else.
I do 20 years. I do 20 years for 10% of what they didn't collect yet. Maybe. I mean, it's a long time, but that's a lot of cash too. These are serious quantities of.
This has been a blast, guys.
Yeah.
I think this is where we probably need to.
Yeah, we'll leave it there. And next time we can talk about joiners and mixers. That's a good topic. And now everybody knows. Hey, that was the Third Coin Podcast, where we talk about the past, present, and future of blockchain, cryptocurrency, and Web3 technology. If you learned something new today, tell us in the comments. If you need a different question answered, ask us in our social media anywhere at The Third Coin. Please like and follow us for the latest, somewhat biased information on YouTube and podcasts everywhere.